Now let's move on to question number 4. As you can see, you are given set of information. You are given assets and liabilities of H. Ahmed for 2 financial years. Okay. So when you analyze the details, you can understand that the capital or the equity balance for both the financial years were not given. Therefore, you need to identify these balances. So you are given assets and liabilities, and also for 2 financial periods. This is as at 31st December 2015, and this is as at 31st December 2016. Okay, so 2 set of informations were given, only assets and liabilities. Now through this, you need to identify the capital. Capital amount or the equity amount is not given. Okay, so you need to identify this. So in order to identify the capital, so what you need to do is you need to prepare a statement of affairs. Okay, statement of affairs. Okay, so what does it mean? Statement of affairs means you need to prepare the statement of financial position. Okay, statement of financial position. This is nothing but the vertical presentation of your basic accounting equation. So what is your basic accounting equation? Assets equals equity plus liabilities. So this is the basic accounting equation. Okay, if you present this, if you say assets, then equity and liabilities. Okay, so your total assets should match with equity and total liabilities. So if your assets, let's say it's $1,000, it should be equal to, let's say your equity balance is 600, your total liability is 400. So it should be equal to 1,000. So this is the financial position, statement of financial position. This is nothing but it's a vertical presentation of your basic accounting equation. This is the basic accounting equation. Okay. Now, based on this information, we'll try to prepare this statement of financial position. So first of all, you need to take the assets. Okay. So you know the assets are 2 types of assets. We have non-current assets and current assets. In other terms, we call it fixed assets. Okay, fixed assets. Okay, so let's take the non-current assets. Non-current assets first. What are those? As you can see, you have motor van and fixtures, then inventory, trade receivables, bank cash. So these are current assets. Trade payable, loan from JSING is current liabilities. Okay, so let's take the first 2 items. Motor van, this is motor van. How much? 10,000. Then you have fixtures 7,000. So therefore, your total non-current assets will be 17,000. Then let's take the current assets. These are current assets. First of all, we'll take inventory. Your inventory balance was 8,500. Then we have trade receivables. 9,500. Then we have the bank balance. Bank balance is 11,100. Then the cash balance is 100. So when you take the total of current assets, so that total will be 29,200. So just take the total. Total will be 46,200. So this is the total assets. Now we have taken the total assets. Then we need the equity balance or the capital balance. So that balance is not given here. So you need to determine the value. You need to identify that value. Then we'll take the liabilities. As you can see, you are given current liabilities. Okay, so there are two items, trade payables and loan from J. Singh. Okay, so we'll take those two balances. Trade payables, which is 8,000. Loan balance is 6,000. So therefore, your total liabilities will be 14,000. Okay. So when you add up these two, equity balance and the liabilities, it should be equal to this balance, your total assets. This is a basic equation. Assets equals equity plus liabilities. Okay. So assets equals equity plus liabilities. So therefore, this equity plus liability should be equal to 46,200. So 46,200. So thereby, if you subtract this balance, how much will be the capital? So capital will be 32,200. Okay. So now we have identified the opening balance, opening capital balance. This is the financial statement of financial position. As at 31st December 2015. Okay, so you have to mention the name of the owner, H. Ahmed. Okay, so you can mention H. Ahmed. Statement of financial position as at 31st December 2015. So we have identified the equity balance. Now let's prepare the balance sheet or the financial position as at 31st December 2015. The same concept, same process. Okay, So I'll take this side, statement of financial position as at 31st December 2016. Okay, so we'll start with non-current assets. As you can see, we have motor van and fixtures. How much? Motor van after depreciation 8,000, and here 6,300. Okay, so we'll take 8,000, 6,300. Okay, so that balance will be 14,300. Then let's take the current assets. As you can see, you have inventory balance, trade receivables, bank balance, and cash balance. Okay, so let's take inventory. Inventory balance. Okay, 9,900. Then you have trade receivables. So trade receivables, it's around 11,240. 11,240. Then the bank balance. Bank balance is 11,700 and cash 200. 11,700. This is bank. And cash balance is how much? 200. So when you take the total, so that total will be 33,040. So therefore your total assets value will be 47,340. So let's take the equity. So we had the opening balance that we already found out. This is 32,200. This is the opening balance, 32,200. Okay, 32,200. Okay, now let's take the liability side. Liability side, only two items, trade payables, and let's take the loan balance. Okay, so you can see trade payables 8,700, loan 4,000. 8,700 and 4,000. Okay, so that balance will be 12,700. Okay, now you know the equation, assets equals equity plus liabilities. Therefore, your total equity plus liability should be equal to 47,340. Okay, so how much should be the total equity balance here? How much should be the total equity balance? So your total equity balance should be, this balance should be 34,640. Okay. Now, opening balance, as we already discussed, this equity, the closing equity, this is a closing equity balance. So when you take the closing equity is equal to opening equity plus profit less drawings. Okay. So the closing equity balance is 34,640 now, 34,640. And you know the opening equity balance, 32,200. The profit figure you need to identify. And also you are given the drawing balance. How much is the drawing? 9,000. Okay. So drawing balance is 9,000. So how much is your profit? So profit is equal to the closing inventory, closing equity minus 32,200 opening equity. This is the difference, plus drawings 9,000. Okay, so that will give you the profit figure. So profit figure should be 11,440. Okay, so therefore what you should do is opening balance plus profit 11,440 less drawings 9,000. Okay, so that will be the total of the closing equity balance, 34,640. So this balance plus 12,700 will be 47,340. Okay, so this is how you identify the equity balance for these two financial periods based on this information. Okay,